Good evening and welcome to the Australian Stock Market Show. Tonight we'll share with you some of the best industrial stocks to buy and discuss whether you can gain an edge in the market by following the transactions of insiders. On top of that, we'll have plenty of other stock opportunities to get into as we help you to make better, more informed decisions. Hello, I'm Janine Cox, your host for tonight, and joining me is Dale Gillham, and we're Australia's most trusted stock market educators. Good evening, Mr. Gillham.
Hey, how you doing?
Yeah, good. My neck's a bit stiff. The skin on my neck got burnt.
Oh, you've been going to that doctor again to do a bit of a tuck or something?
No, this is just the sun. Unfortunately, I think it was the sunscreen that I was using wasn't right, and it just burnt my skin. It was terrible.
So who are they? And let me at them.
Yeah, thank you for that.
So, but the big news today is not your neck; it's the interest rates
right.
going up again by another 0.25.
Yeah, that's right.
So yeah.
Well, that was expected, and so the market's sort of shrugging it off, really.
Yeah, the market's been bullish yesterday and today. So, but can't wait to get into that. But now we need to keep moving on, don't we?
Really?
Well, I hope so. I'm sure
right.
they're champing at the bit to look at stocks and ask questions.
All right, now I have a quote for all tonight, which comes from Abhinav Bindra, who is an Indian Olympic gold medalist, retired sports shooter and businessman, who said, "It's not wise to just blindly copy what others are doing." Dale, so simple, and it really says it all.
Well, somebody's jumping off a cliff, I'm not doing it, so that makes sense to me, doesn't it? Yeah. Don't blindly... We know that 90% of traders aren't consistently profitable. And I mean traders, not investors. We know the masses generally get it wrong all the time, as they do with lots of different investments, so that makes sense to me. You know, to me, it's always about carving your own path and knowing what you're
the topic was about following insiders, so it's not being blindly following what you perceive others are doing. And I guess that's the whole mass market psychology, isn't it? The whole
but people like we did a podcast which is being released today, which is if you haven't seen it yet on our podcast, Apple iTunes, we did a whole podcast last week. It was about an hour and 20 minutes. It's all on this sort of stuff, people trading and getting it wrong, and what they can do to get it right, and the processes and everything else. So and it'll be launched on YouTube tomorrow, so if you watch out for that if you want to watch it on YouTube. But I think we do need to get into, or we need to, before we get into our first segment, we do have lots to cover, but before we get into our first segment for tonight, if you do have a question that you're just dying to ask, then all you need to do is simply text Janine and I on 0423 959 846. That's 0423 959 846. So make sure you pick up your phone right now, get texting your questions.
While we wait for your text, it is the first Tuesday in the month, and this means we normally take a look at the Australian market. So let's get into the charts.
All right, so they heard my opinion yesterday. So all the subscribers on Talking Wealth did, the people on YouTube didn't.
Really?
Yeah, because I don't do it on YouTube anymore. It's only, my market reports are only on
TalkingWealth.com. It's a private report. They must feel special now.
And I went into some secret special stuff too.
Did you?
Yeah, some of the stuff we do in our advanced course and stuff.
Wow.
Gave them a little sneak peek on that one.
That's fantastic.
That's some of the value of subscribing to Talking Wealth. You get to see this sort of stuff.
That's great, isn't it? Look, I mean, I just thought today I would just have a bit of a mention about these tops, because people often talk about topping patterns on the market.
Yep.
And, you know, it really gets under our skin when people look for all movements on the market. Like, for example, if I go back to the chart here and someone's looking here, they'll say, oh, that's a double top. You know, and it could be every single little point on the chart could be a double top or triple top if you really wanted it to be.
You were watching my market wrap yesterday. I was talking about that stuff because so many people say, oh, there's a double bottom, there's a double top. And I went, no, it's not. People just... They get little bits of information that they've watched on a YouTube video and they think they're finding everywhere. And I was also talking about reversal signals and stuff like that as well, and showing people last week's bar on the All Ords and what I thought about that and how people get that wrong all the time as well.
Do you want to take it away? You're doing a really good job.
I'm going to shut up now. You go. So I just think you're just stealing everything from my market report. I know
and you thought I didn't watch it.
You're a thief in the night. Now, let's go back to the All Ords.
All right. Now we can see up here that we've actually got 3 tops there.
Yep.
Did you talk about that?
Nope.
Okay, so I'm not taking anything from your report at all. It's okay, so we've got 3 little tops there. Now, the theory talks about that if there's a sort of a topping pattern, that then we could see a certain decline down into a low, which we almost did see. It's pretty close to it. So I thought that was interesting, the fact that the market did actually come back. But if you see a triple topping pattern, we're not expecting to see a little tiny decline like that, though.
No.
If it is a real triple topping pattern, because we're talking about the top at the end of a major run.
Well, that's extremely bearish, isn't it?
Isn't it?
It's extremely bearish.
And they often tend to be ones that are, you see the bars moving in a really volatile way around the times of those tops happening, which that's not really, an example of that sort of thing. It's much more, I guess, a softer movement.
Well, that's the difference between having a surface level understanding of what maybe a double or triple top is and really understanding why it unfolds, how it unfolds and what causes it to do what it does, and also what's going to happen after that and the confirmation of all that as well.
Yeah.
And that's where a lot of people don't get into. They don't understand that full depth of everything else. And that's
I agree.
Sort of why understanding these things will help you understand the market better and trade better and make more money.
Yeah, so I mean, there were a whole lot of things lining up to tell us that the market had turned around this level. Now, I mean, you're obviously, and like me, expecting the market's going to continue to rise, but what do we think will happen around this high here? Do we think the market will turn back?
No, I think it's going to explode right through it.
Do you?
Absolutely, positively, definitely. In case but it may not.
Just in case.
No, but I'm pretty positive that when it gets up to that level, it may slow a little bit, but I think it'll go right through it. I think we just
Now, what would happen if the RBA came out and instead of giving the market a rest for a number of months on the interest rate rises, what would happen if after the end of the financial year they decide to come out with a few more successive increases?
They're not.
No, but I'm just saying, can you just explain to people what that could mean to the stock market if that did happen?
Well, I mean, interest rate rises can mean the economy is booming and that's good for the market, but too high interest rates will do the opposite because obviously costs of borrowing are going through the roof for businesses, etc. And the rising interest rates are designed to slow the economy down, and that's what we're seeing the economy slowing down, although jobs were up last month. So, but there's, with all the lockdowns we had, a lot of people weren't spending money. So now it's not strange that they spent money over the last year or two, and no wonder that CPI has gone up. But a lot of the CPI is also part of just supply chain issues, which are slowly getting sorted, but there's still supply chain issues causing prices to be high, and also the government's policy on energy, which is CRAP, their policy on it. I think it's disgusting that they think they can continue to supply energy to Australia at a cheap rate while the way they're going, the decisions they're making. But that's another high hat that I can get onto and horse that I could ride, but I won't. But tell everybody where you think the market's going.
Look, I guess
the
discussion wasn't really about where I think the market is going, because I know that you will have covered that brilliantly off yesterday in your report.
Sensational if I don't say myself.
So, I mean, I think in one of my previous ones, it would have been last month, obviously, at the start of the month, I gave an indication for the target for the market around 9,000, and then the next one 10,000.
Yeah.
But I hadn't sort of really gone into what could happen around these highs when the market comes back up to it.
So what do you think is going to happen? You already asked me.
Let's think about it in three different ways. So it could be that the market shoots through, and Dale could be right about that.
So we're talking, what, in the next few weeks, next month, next 2 months?
I'd say in the next couple of months, we'll be through.
Okay.
However, if it goes up to that level, it's not to say that it might not come back again and test. So there's that second scenario. And the third scenario, which is the worst case scenario, is if something happens completely out of left field that we're not expecting and we get a big reversal down from that level. That's the other side.
I think that's the least likely.
That's the least likely. I'd agree with you on that.
Yeah.
So at the moment, I'm not saying that it's going to shoot through. You could be 100% right, but I'll just wait.
One thing I want to add
for the next couple of weeks,
one thing I did say on my report yesterday is we need to trade on confirmation, not speculation. So whilst we're being more positive in our outlook on the market right now, this last bar is just really, it's yesterday and today. So it's not enough of a confirmation to say, yes, the market's going to go through that all-time high in the next month or two. We still need to look at the stocks themselves.
All it takes is for the banks to turn up.
Correct. So we need to look at the stocks we're buying, not just the market itself. So,
exactly.
And that's where a lot of people think, oh, the market's going up, I'll just start buying stocks. No, that's not what you do.
Well,
any famous last words?
I think you just said it. That is it for our thoughts on the Australian market.
Okay, now for those who are watching us on YouTube, just a reminder that you'll only see part of this live stream, but you can still, however, participate in our show by emailing your questions, which we'll answer in next week's show, or you can just text us right now, like we said before. Now, if you do want to see the full live show, you will need to head over to talkingwealth.com and subscribe over there. Now, with subscriptions at just $3.54 a week, it's an investment in yourself that will deliver far better returns than a cup of coffee each week. So now let's get into our first email question for the night. Now we have an email from Marlene who says, "Hi Dave," it's Dale Marlene, but that's okay, I'll forgive you eventually. "Hi Dave and Janine, I purchased 11,000 red at 18.6 cents, sold 5,000 at 43 cents. It has now come down to 13 cents. Did the stock price fall because they wanted to give shareholders an opportunity to buy the stocks at a lower price? Is it a good to buy more stocks offered in a share purchase plan? Also, what do you think about CCX, RBL and BRN? I've already lost 90% on CCX and RBL. Not sure what to do. I have all these stocks purchased through my superannuation, and I'm more medium to long-term investor. Thanks for your kind advice. Regards, Marlene." Well, I think you better answer this because I'm not going to be nice.
I think, Marlene, thanks so much for your email. Very good of you to come forward and just declare that in open honesty. I just have to say to you two things. One is really have a think about the type of shares that you're putting into a superannuation fund. You're medium to long term. So therefore that straight away cuts out a significant percentage on the market. In fact, often, and if you've read Dale's book, in the book it talks about focusing on the top 20 shares, typically, for a superannuation type investment.
Well, if she'd done that, she wouldn't have been down 90% on those two stocks at all.
Well, that's all good in hindsight, but it's about where do we move from here?
Well, she's asking us what we think.
I love the question about with those share purchase plans.
Yeah.
So what do we think about share purchase plans? Well, we really don't think a lot of them at all, is the bottom line. Because you end up with a lot of little shares, small parcels of shares, and it really doesn't add value to you in the long run. But if there's a corporate action and it could affect the dilution of your shareholding, and your holding is in profit, that's a different thing in terms of looking at how all of that works. But so we're not big fans of the share purchase plan. And the other side of it too, Marlene, is about will they have tried to help investors by bringing the price down? There's no way in the world that they would try to do that to help investors. It's all about the institutions or the people with the big money driving that price down. Now, quite often when you see these offers come out, the share price will fall down to those levels or below. It's just a normal part and parcel. And if the share price actually stops before those levels and holds up better, that's actually a good sign. So, you've got to just tread very carefully. And what's a good saying for this?
Get educated.
No, don't look a gift horse in the mouth. Is that the sort of thing? Because that's what it is. Just not assuming that they're out there to help you. It's always about what's in the benefit of the company
the
itself.
Major shareholders are driving.
It should be about all little shareholders and trying to help every little shareholder that there is. But no, unfortunately, that's not how things work.
Okay, so Marlene needs to have better choice on stocks.
Yes, better choice on stocks to suit a superannuation type portfolio, because the sort of stocks that you raised are more for trading stocks, for people who are experienced traders who want to trade in and out of the market and gain advantage that way, not for buy and hold type strategies, unfortunately.
Well, she's more medium to longer term, so these aren't.
So it's a hard lesson to learn, but it's the reality of it.
Huge lesson to learn. Huge lesson to learn.
So we're going to look at this We're not looking at the chart. Okay.
No, she's not. Yeah, but we've given her a view on those stocks. I mean, what are we going to say? They're all down. So they're all terrible stocks. So what are we going to do? Tell her to sell them or keep hold of them? And
well, she has to make her own decision.
correct. She's got to learn from the mistakes. And this is a real hard lesson for her. Big hard lesson. And I do feel for her. But, you know, there are proper stocks to put in the super fund.
Yep.
And these aren't.
I know she's listening to that.
Yeah. But we do move on, and we do have a text, Janine, and if you want to put in S32 into the computer, we can bring it up. And this one's from Daryl. He said, recently added to top 20 thoughts. So he's saying S32's recently be added to the top 20. That's always really, really good news when a stock goes in from a lower indice into a higher one, from the top 200 to the top 100, because what happens is your big institutions need to rebalance their portfolios to, if they're a weighted managed fund, and they're specifically weighted to their index in terms of whether it's a top 200, top 100, it's pretty good. But moving into the top 20 is not it's a big step for it, but it's probably not such a big change in the weighting.
Because it's so close to it, it's been hanging around there for a while.
That's sort of part of what I'm thinking. But how many managed funds are just the top 20 stocks?
Well, the managed funds would have been adjusting slowly as the stocks moved anyway. It's a bigger jump, for ones that go into the top 100. Often you'll see
that's what I'm saying.
More of an influence there.
Because it's a much bigger move. But we're being at 21 and moving to 20. How many managed funds do you know just invest in the top 20?
Yeah, exactly.
And that's the difference. So you won't see a lot of new buying into it, but it is great that it is there because it is a good stock. It's starting to look a lot better.
It is starting to look.
Did you want to have a quick look at it?
Yeah, look, I mean, it's when you see these sort of reversals here, you know that sometimes there's something, in the waters or something's going on. The last couple of months, it's more or less been sideways, though. We haven't really seen a big move, but it's good to see it moving up. I mean, that's the main thing because it created this gap on the weekly chart. It came back and filled it, and just last week it reversed so strongly. So, but you can see it's already pulling back today at this stage.
Okay.
So I'd say it's going to be a slow ascent for it.
A slow ascent. Okay.
Yes. Now we have another text, and this text is from Michelle. Fantastic, Michelle. Well done for texting through. Michelle's a student and she wants to, it's about clarifying a question. Please explain PE ratios, R&R worked out. I'm just a little stuck on my, I'm not quite sure about the wording there.
I don't even understand the question.
No, neither do I.
I really don't understand the question. Sorry, if you're a student, then if you've got questions, then always send them through to the support team. This show's not a substitute for the support that your team. So if you're a current student, I would just look at go to the assessment team. So student support, you have the email address there. The guys will be able to start asking you more questions and get involved and really finding out exactly what your question is. So I would just send it to there. So anything else you want to add to that?
Before you send it, I would just sit down and actually go through carefully exactly what it is you want to know, referring back to the course content.
Yep.
Because it's the quality of the answer is determined by the quality of your question. That's what I'll
Well, that's
say.
true. Yeah, I mean, we only got a Google review today from somebody, and he just was saying how well structured the course was. He said these are the three key things for the course. The number one was how the course was delivered and the structure of it and the process in the course. And number two was the content in the course. And he goes, you can see he said you can't see most of the stuff in this course on YouTube at all. And he said just the way it was delivered and the content was amazing. But he said number three was the support. He just said it was just second to none. And that's what I'm suggesting she do. Go and contact the support team. They'll get back to you really, really, really quickly. So you do have that support mechanism. But let's move on, hey?
All right. Well done for texting in anyway. And look, our next question is from Lartha. Hi, Dale. Please let me know your thoughts on AIS and SLR, as I'm an investor with a loss of 25% and not sure whether to sell or hold. Thanks, Lartha. Wow. Look, some interesting stocks, extremely volatile shares. Arias Resources.
This is AIS,
I actually do. It's a little bit illiquid still. I mean, in more recent months, it's improved its liquidity, but prior to about what was it, October or was it July? Probably July around that time.
Well, we don't know where she bought it, do we, really?
No, we don't. But she said she's down 20%, so I've just drawn a line in the sand.
You've just drawn 20% from that high.
Yeah, and just saying,
because
well,
she could have bought over here and be down 20%.
I was thinking she may have bought when the trend was already up, which would be nice.
That would have been nice, but yeah. So at this point in time, what are you thinking on AIS?
Well, after last week's performance, not a lot. You just have to wait. I mean, for one, if I was holding the stock, I'd be waiting to see if the dust settled.
Yep.
But if you had a stop loss in place and it had fallen 20%, you know, it's take the stop loss. And if you don't take the stop loss, you still need to know exactly how you're going to exit. So if you've chosen to hang in there and just see whether it rebounds a bit, as someone who's managing that position, you just need to make sure that you still know your exit plan. So if it charges up this week and recovers part of what it lost last week, then we know it was a bit of an overreaction of the market.
Yeah, it just worries me. It's such a big week. You know, we're talking about 18 cents on a 80-cent stock. That's a pretty huge move and that sort of stuff. So, yeah, and
I'd
look,
probably
it's
look
really
up announcements
this is
as
really
well,
a trader
just have a
stock.
look.
I mean, you have a look at it. This is a trader stock. This is not an investor stock. You know, we're seeing this stock go sideways for the last 10 years. Even though some of those moves would be massive in price, but look how illiquid it is. This is very much a trader stock, not an investor stock. So, but again, I'd be like you know, stick to your stop loss. Silver Lake was the other one, and again, I would say this is very much a trader stock. It's not necessarily for the faint-hearted, but look at that. That doesn't look good at all to me.
No, it doesn't.
So again, I'd be agreeing with you.
Concerned about that one.
If you've got a stop loss on it, take it. If you don't have a stop loss on it, make sure you set one. Pretty much they're the sort of bits of advice that I could actually give you. And if you're not sure how to set your stop losses, then maybe you want to get my book. My first book is still available for free. It's called How to Beat the Managed Funds by 20%.
It's
available
$9.50 for postage, is it?
It's $9-10 to postage and handling. That's what you got to pay for it. So that I printed the book, giving it to you for free. You just got to make sure you pay for the postage and we'll get it out to you pretty quickly. It is available on the homepage. There's a button on the homepage for you to order it. Otherwise, just pick up the phone and ring the team on 1-800-858-272. But that'll show you how to set stop losses and what you should be doing, and also give you a better stock selection. If you are more of a medium term or a longer term investor, then it'll show you how to find the better stocks that will suit you better so that you don't get into these situations. But I think that's it for that question from Latha now. Now it's time to get into our topic for tonight, Janine, which is about buying stocks that one might say are the backbone of the stock market. Now, we are talking about the industrial sector, but before we get into that tonight, is also about whether investors can gain an edge in the market through knowing when members of a company board buy and sell shares in the company that they govern.
That's a hot topic, Dale.
It's sizzling.
These director transactions make headlines like Brambles, and the stock rose in the months following this news, which we will talk about shortly. And as usual, we'll talk about lots of other stocks tonight. So Dale, how about we get right into it and take a look at some announcements released by Brambles in 2022. Then we'll take a look at the headlines.
Geez, we're getting stuck into it, isn't it? I like that. I like we're getting it stuck into it and give you all the best stuff straight away. So what are we doing, Janine?
Okay, so first up, we're actually going to have a look at market index.
Yep.
So you'll see on the website there, I've got Brambles up, and we're just wanting to go through the detail on that.
So this is marketindex.com.au?
Yep, and we're wanting to actually just go through and see what's next. So if we're looking down here, we can see that there's a bit of a description about Brambles and what they do.
Yep.
So as you come down further here, you can see there that we've got a list of announcements.
So this is the list of ASX announcements, is it?
That's right. So these are the ASX announcements. So you've got all sorts of things in here. If we can zoom in a bit there, Dale, can you just...
Oh, can you want me to zoom in? Okay, let me zoom. How do I zoom in?
So these ASX announcements have change of director's interest notice that you can see there. We've also got application for quotation of security. So there's all sorts of information that people could find there. And it's good when you're first learning in the stock market. You can actually go through those and understand what's actually available on the website. And Market Index lays it out pretty well. So if we're looking at that, we can see there that's at the top of the screen there.
Yep.
And we're just moving on a bit further, and we can see a bit more. We can scroll down a little bit
Oh, you
further.
want me to scroll down there? Okay.
Yep.
So
There's a corporate overview.
Yeah. Just tell me what to do. Just don't beat around the bush, okay? So if
Okay,
you want me to move
I'm going to
forward?
tell you what to do.
All right.
Sit up straight.
Okay.
All right,
Yes,
that's
Mum.
it. Get you back into it, and let's go to the next level.
Okay, keep going. Gee, how far
There's
does
a
this
dividend
go?
history there as well. It's just full of goodies, isn't it? Now, this information can be found on good brokers' websites as well, and as well as Market Index, and of course on the company Brambles website, they've got all the information on that. So, if we scroll down further,
Yep. Okay, we're scrolling. Okay.
we can see there's a little graph there, upcoming dividends, which is lovely.
Yeah. Okay. Oh, I've got to keep scrolling. Okay. So now I'm on directors and management.
Yep,
Oh, okay.
we need to move on a bit
So
more.
this tells you who the directors and management are, and you get their little bio down the side there, so we can do that.
Yep.
Now, this is the important part that you want to talk about, called directors' transactions.
Yeah, so they're directors' transactions, so you can see there's a whole list of them when they occur. So
All in
if an
date order.
announcement comes out, you can match up the announcement, the company announcement, and it's easy to see what's going on, right, when you're looking at this. And you can read the announcements and you can look at this information and determine whether the shares were bought or sold and what was actually happening, whether they were issued the shares via the company or whether they actually purchased them. So
Okay, but an important thing is what it says up here: directors must report any changes in shareholding to the ASX within 5 business days. That's just
right.
not for Brambles; that's for all companies that have to do that. So any director of a company
Yep.
must report, any buying and selling of their shares, because it's about being transparent to the market,
yeah,
isn't it?
isn't it?
Because it's important to know when a director's buying and selling. Absolutely, because that can
Well, we're
influence
trying to make
people's
it.
perceptions.
It's got to be a fair market, and that's really
Okay.
the point of it, isn't it?
Yeah, cool.
So how about we scroll back up to the announcements and look at an example on the 21st
here,
of
yeah.
November,
Okay, I'm going.
2022. So was it October? Or was October? Is that the one we're looking at?
Oh, so you want to go to here, so
November?
you want to go to this one?
Okay.
That one?
Actually, actually 21st of November. I've actually messed you up, haven't I?
You
with
have
this one?
messed me up.
I've
Come on, girl.
confused you.
What are we doing? I'll
Yeah.
let you run the mouse for a minute.
Okay. So if we look at the 21st of November here,
Okay.
we can see that there were some securities that were issued. So you'll just see a letter there, that Brambles change of directors interest notice. Yours faithfully, Brambles. Isn't that lovely? And the company secretary. And here you've got some information saying what's actually occurred. So the date of the change was the 18th of November. So where this can be really good is you can match this up against
The chart.
to see whether it made any difference to the share price. Now, these are securities that were actually part of a performance share plan. You can see
Okay.
there. So it wasn't the director actually purchasing them in his own
Basically
right by the
part
look
of
of
their
that.
salary, so to speak.
Yes, part of the remuneration.
The
So
remuneration,
so
yeah.
we'll close that one off and we'll go back to this list here. Now, this can really be tricky for investors, can't it? Because sometimes an article may be written stating that directors have bought or sold shares, and so some investors may automatically think that they should do the same. So it's important that you always read the announcements yourself.
That's really good advice, Janine.
It's pretty simple, but it's true.
Well, it's pretty smack you in the face, isn't it? Always, but don't assume something. Actually read it and understand what it is, because directors get given shares all the time as part of their packages.
Yes.
That sort of stuff. But then sometimes directors are buying a house or they're doing something, so they just liquidate some shares to get some cash to go and buy a house or whatever else. It's not
Yep.
necessarily because they think the company is not going to do well, so they're selling down their shares. And other times they buy more shares or they take up options. There's all sorts of different types of transactions they can get involved in, isn't it?
So true.
As long as they're transparent with the market, that's the main thing.
That's right. Now, Dale, we know that the media will sometimes create a bit of a storm in a teacup over company
You think
directors
so?
buying or selling stock in their own companies. Do you recall the big hoo-ha that happened when Brambles the board members bought some stock last year?
I don't remember any of that. I must
How
have
about
been.
we have a look at it then?
Well, let's have a look at it and you can remind me. Remember, I'm getting older. So, but anyway. But let's go and have a look at it. So where is it? So we've got to go and bring up the announcement. Is that what we're looking for?
First of all, what I want to do is actually have a look at this announcement, which it's not there now. Oh, where is it?
It's on page 5.
Can they see it?
It was on page 5, isn't it? The one I brought up before.
Okay. I
You're
don't
on
know.
page 3. So go to page 5.
Page 5.
Now I'm telling you how to do what you've
Thank
already
you. That's
constructed.
awesome. Okay, so around that time, It's just something disappeared off the screen there for me. So around 20th of September 2021, this actually is. This was the date of the last notice. You can see there. This is John Patrick Mullen. He's one of the directors. And this is about the acquisition of ordinary shares. And this is into obviously his family trust company. And it shows you the days he's actually purchased the shares on the 25th of October, 26th of October. Prior to the purchase, he had 31,400 shares and he purchased 20,000. Now, 20,000 shares when you've only got 31,400, it's a pretty big jump in the shareholding, isn't it?
Well, it is. It's a big jump in the shareholding that you have. So that's a significant decision that you would make to do that.
Yeah, so let's just have a look. There was an article that I was saying before.
Yeah.
Perhaps we can have a look, and that grabbed my attention. It was on Yahoo's website.
Yep.
So let's take a look at that article first of all.
Okay, so where's that? So do we need to bring that up on here?
Yep. No, we don't bring the viewers can see that article. Now, this is actually where the directors directors bought more shares, and the article actually said has bought 64% more. So if investors see that sort of, this is interesting, isn't it? Because it's independent. It's an independent non-executive director, Chairman John Mullen, and that's what he said. It just bought 64% more shares in Brambles. Now, how do you think that investors would respond to that, and how should they actually respond to these sort of announcements?
Geez, I think some investors would just go, oh my God, if he's bought that 64% more, then he must think this company's going to go through the roof, so I'll just jump in and buy. And some people will blindly do that. The smart ones will actually read the announcements, have a look at obviously the price chart, and look at the real valuation of the company, and look at some of its metrics, like its PE ratios, its EPS ratios, all of those sorts of things, because you don't necessarily understand everybody's motivation for buying or selling shares.
True.
But it's not just blindly look at it, but that's what I would say. Just do a little bit of research, because it doesn't matter if you buy the day after or 3 days after they're bought. It doesn't really. Not in the big scheme of things. So is that a good answer for you?
That's a great answer.
Okay, is that exactly what you wanted?
That is fantastic.
All right, okay, well, let's investigate. Now, we did find the same article on another day, or the same content, but it was relating to a different transaction. Now, let's take a quick look at the announcements. Now, the article was at the end of October 2022. So here's a change of interest notice on the 28th of October 2022 on page 3 on the site. And on opening, you can see that the number of shares acquired totals 20,000 shares purchased on the 25th and 26th of October, like we mentioned just a few minutes ago. Down to the next page, we see the nature of the change was on market acquisition of 20,000 shares. So that's what we were talking about, that 17,489 shares plus the 2,511 shares on the 25th and 26th of October.
Yeah.
So that's what we're
exactly.
talking about.
So we're saying that this is not a company allocation. So that's the first thing to clarify for yourself. So it means it is a good example of what we're talking about here, and one that we can then go and have a look at the share price on.
Well, I mean that is something of interest when you see that sort of stuff. So can we take a look at the chart now and show everybody exactly what actually happened on that day? So let's bring up Optima and have a look at that. So there you go, bringing it all up. That's SLR, so that's not Brambles yet. So there's Brambles.
Yeah, so here's this is actually when it occurred, believe it or not. It was 21st of October, it was on the Friday.
Yeah.
Now let's just expand this up, because this is where it gets really interesting. Yeah. So there's the close on the Friday, it closed down. Yeah. Now he's bought there. Now, I don't know if he was just very smart, but look at that. He's got it right near the low when he's bought. And then it's turned around and gone straight back up some months later. 20% return, not bad. But does that, what does that tell you? So when do you think that...
Were there other announcements coming out at that time?
Look, there would have been other announcements on the website at that time. Is that what you're talking about? Or about the company?
Well, obviously, there are things like if he knows that they're going to be, as the chairman of the board, he would know their financials. That's the sort of stuff. Is there other stuff around it that would suggest the share price was going to do what it was going to do?
Yeah, well, look, that's all interesting. So we just need to move on a bit.
Okay,
so that we
move
can,
on. I'm not stopping you at all.
Okay, that's fantastic.
Go for your life.
So when do you think that investors should look at company announcements, and how often?
Look, I think if you see a significant change in price, like we often said with people, it's like, oh, first place we go is when you see significant move up or down. We always go, let's look at the announcements first and foremost to understand if that's something that the company announced that caused that to happen, whether it's a takeover bid or something, or a bad report, bad earnings report, that sort of stuff. But I think, they really only need to do that. And probably the other time is when you're about to buy.
Yep.
When you're about to buy or possibly even sell. It's just looking around those company announcements at that time when you're buying and selling to see what's going on.
Fantastic. Look, I have to agree with him. Shall I say it out loud?
Oh, well, miracles never cease to happen, do they?
So while a company's share price may rise around the time a director has purchased the stock, this does not always occur. So making decisions based on changes in directors' interest is risky. So what was interesting also was that the same article was actually rehashed and re-released. That's what just quite amazed me. It was exactly the same article, rewritten, just a different date and different number of shares.
Same paper?
The same release. I'm sure that doesn't surprise you at all.
It doesn't. It doesn't surprise me because the media, they're getting rid of journalists, a good journalist, and they're not paying a lot of money. So therefore, if they can rehash stuff, they'll just rehash stuff. So that's really what they're doing to me. So it doesn't surprise me at all. Sometimes they just change the headline and don't change anything else.
Yeah, right. Well, look, tonight there's such wisdom coming from right next door, isn't there?
What do you mean? Just tonight? Don't I have wisdom other nights?
Okay, enough of all of that. How about we get into the chart of the industrial sector? This is more the sort of stuff we want to do, isn't it?
Okay, so go to the chart. So we're going to go and look at XNJ, which is the industrial sector, yeah?
Yes, we are. Now, is that unusual to you, what you're seeing there?
No, it's not really unusual. This
I
looks terrible.
wanted to say yes.
Yes, it does look unusual to me. But, obviously we talked a couple of weeks ago about how the market the last couple of years has just been really choppy and sideways because of COVID, and we've got to stop using the COVID excuse. But you know what I mean? It's the market's certainty drives the market, and we've had a lot of uncertainty over the last few years.
So uncertainty is making it go sideways.
Correct.
Isn't it? Yep.
So I'll just pull my foot out of my mouth and that'll be fine. Okay, how's that?
Okay, that's fantastic. So in terms of the look and feel of the industrials, we're talking about these two highs. So there's the one of the GFC. We're not even through that yet.
We're not even through that.
And we're not through the peak for January 2020. So there's a long way to go.
Yeah, I think there's good news for the industrial sector if we can get, as I said, once these interest rate rises slow down and we start getting supply chain issues fixed, I think it's good.
Okay, fantastic. Look, Dale, before we finish, there is something else interesting that we need to look at, and that is looking at the constituents within the sector. Shall we do that?
Okay, well, that's a great idea. There are some interesting subsectors, if I can say that, within the industrial sector that are worth a look.
Well, how about we go to List Corp's website? It's easy to see the breakdown there.
All right, but before we do, Janine, we do need to say goodbye to our YouTube video viewers, or YouTube viewers. Sorry, I should say that. I get that wrong every week, don't I? It's terrible. The guys are taking bets on me of getting it wrong nowadays. There's a jar out the back full of money. But so sorry about that. So our YouTube videos, if that's you, then you can still watch the whole 75-minute show, which is we're running 80 minutes. So that's what we've been doing the last few weeks. But you can do so by heading over to talkingwealth.com and subscribe to Talking Wealth. Now, as I mentioned before, it's just $3.54 a week, and for that you can watch this show in its entirety and my stock market update, which is on every single Monday, along with hundreds of interviews designed to help you be more successful in your life. You can also still send us in an email for us to answer your question next week or in next week's show. Just email info@wealthwithin.com.au. But for our loyal subscribers watching on talkingwealth.com, then just stay tuned as we'll have something interesting, some more interesting stocks along with a host of other great content coming up. We'll also have lots more of your questions to answer, so stay tuned. We'll be right back after this short break. Investing well can be a daunting task, especially for those just starting out. So what are the three things that confident investors do that unsuccessful investors don't? Successful investors know that investing well is important for their long-term wealth. Successful investors also consider the macroeconomic factors such as interest rates, inflation, and government policies that may impact their investment. Unsuccessful investors, on the other hand, make hasty decisions without conducting proper research. They also jump into a stock based on a hot tip, or they invest in the next fad like Bitcoin without fully understanding what they're doing. Here's your March 2020 when we had the COVID low, and you got a lot of these people that just jumped in on this massive tsunami wave. It went up, the more people jumped into it, and they lost money. And you can see here, they're down 78.3%. Anything that's freely traded, you can use exactly the same rules and tools on this as you can on anything that's freely traded, like FX or stocks or indices or commodities or currencies or whatever that is. And I even had people through here saying, it's going to hit $100,000 or $200,000, and told me I was crazy when I said, it's probably going to hit 20,000. But I haven't heard from them for more than a year, those sorts of people.